Welcome to another episode of Let's Talk Crypto, the live stream or not so live stream where we talk about crypto news and price action. Today, guys, we see the market, kind of doing its thing, kind of going sideways, but in the big picture, we do see a lot of strength here, in this market. We do see Bitcoin climbing up. This is the last 7 days. Look what the market has been doing. Bitcoin up approximately 12%. Some of the altcoins looking pretty good. Some of the altcoins waiting for their turn to see some capital, basically enter their ecosystem. And of course, guys, this is the opportunities that we wait for here on the channel. We don't mind up, down, bearish, bullish, even sideways. Guys, we take full advantage of that opportunity. And if you appreciate the strategy, subscribe to the channel, click the bell so you don't miss out on any of my future videos, including the live streams at 7:30 Eastern, where we talk about crypto news and price action. Guys, if you have any projects you want me to cover on the channel, feel free to let me know in the comment section below. You can hit me up on the socials. The links are in the description. Better yet, guys, join the Discord. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. The best part is it's absolutely free. All right, guys, let's begin. Let's see what's going on here with this market, because today I do have a special video for you. Guys, we're going to be looking at another narrative, part of the narrative series. The last video that I did, and as a premiere, we talked about the gaming narrative. Now it's all about the real world asset narrative, a top narrative in this market where we could see some of the capital flow into the crypto space. We know that we've seen capital enter. We're at about $2.5 trillion market cap here in the crypto space. And as we see capital enter, we need to hit that 3 trillion, obviously, to reach the previous high in the from the previous bull run. And obviously a common target that a lot of people are buzzing about is that $5 trillion market cap. And if that were to be the case, we're going to see crypto capital flow into the crypto space, a bit into gaming, real world assets, layer ones, proof of work, and all these narratives here that you can see on this list. Guys, I remember starting up into this space and we barely had any narratives. We had a few. All of a sudden, guys, we have pages and pages of narratives, different types of categories of basically solutions to problems, software solutions to problems. And we start looking into some of them, like oracles. We have storage, roll-ups, we have restaking, we have so many more layer zeros if you want to go there, like, if you're looking at IBC or even a parachain options, they're all here. We have launch pools, launch pads, and privacy narratives, and so on and so forth. But for today, I want to talk about the real world asset narrative. Given that, there's a lot of buzz about it, it is a newer narrative. Tokenization of real world assets and real world services could definitely be somewhere where we see a lot of that capital that's entering the space for a bull run into, right? We want to see that happen. Now we see traditional markets, traditional financial institutions basically mention the tokenization of assets, and they also are very bullish on this narrative. So why not start, thinking about building a position within the narrative? So let's do that. Let's categorize this narrative. Let's categorize these narratives by alphabetical so we can find them easier. And then we can scroll down and you can see that we're going to be looking for the real world asset narrative. RWA, real world asset. Let's see, did I pass it already? Probably not. Let's keep on going. OLPQRS, let's see, real world asset right here. So we're doing pretty good, right? We see that the overall market cap is slowly growing. We have approximately 145 different coins. Obviously, this is all depending on CoinGecko, keeping them up to date and so on. We're seeing in the last 7 days, 21% rise in the narrative, which means that we're getting capital flowing in. And look at the overall market cap of the narrative. It's only $477 million. Whereas if we look at the top players in top narratives, we're talking about a lot of capital, guys. We're talking about a lot more than 477 million. So we know it's fairly new. We know it's fairly young. We know that more capital can flow into it. Now let's take a look at some of the projects. Now, when you're building a portfolio for the up and coming bull run, there are obviously ways of, allocating your capital, looking into narratives, which is what we're focusing right now. But then after that, within the narrative, as a subcategory, you should be looking at market cap. You don't want to buy all the micro caps. You don't want to buy all the major large caps. You want to have a diverse portfolio where you can expose yourself to a bit of volatility. Obviously keeping in mind risk to reward and when you get those entries, but at the same time also have some stability in the major projects. And you can see we're rising in market cap, total market cap here, and we do see a bit of a grind to the upside in the real world asset narrative. Market cap right now is doing great, nice slow grind, nice good volume, maybe a bit of sideways. And some of the projects that are trending is Ondo, Pendle, and Mantra. Ondo being a large project, it has been doing very well. Pendle, a financial instrument, trading financial instrument, obviously a good one as well. Building positions into this one might be a good idea, given that, the whole idea is that eventually the crypto space will provide people like you and I the opportunity to get into financial instruments, even trading instruments like what Pendle offers, essentially that are equivalent to the traditional financial markets. And as we see that happen in that transition and that integration of those traditional instruments into the crypto space, it would be safe to say that it's likely they survive and they likely, do very well. And it's likely that we see a rise again in those projects and the capital growth. So what we really want to see is Pendle do well, based on its value proposition and how well the value proposition has done in traditional markets. And we also have Mantra, a layer one that is focused on basically putting real world assets on a blockchain, a tailored blockchain for real world assets. Guys, this is also a very hot idea, because really, if you're looking for a jack of all trades, you're not going to be precise. You're not going to have everything you need specifically for that narrative. And in this case, Mantras, that's what it's doing. It's trying to focus on specific, I would imagine that its functions are specific to real world assets, and perhaps even modular for that case. Its design might even be modular. Ondo, look at the large cap right now. It's at about $1.5 billion. Pretty large right now. It's a $1 billion project, right? So we got to think about what are your capabilities of gains. Could we make a 5x? Yeah, sure. A 5x will take us close enough to about $8 billion, which is pretty large. Fine, but it could do a lot more if you think about it. Look at some of the projects in the previous bull run doing great stuff, and then all of a sudden, what do we expect for this bull run, right? So we got to understand that even though right now we do see it pretty large, how much more growth do we have, considering that we expect more capital to enter? Right now the market cap is at $7.7 billion in the real world asset narrative, so there's a bit more to kind of like get in there. Mantra doing obviously, we just spoke about Mantra. It's doing great as well. It's at $1 billion market cap, fairly large as well, and we can keep on going down. But I feel like exposure into these two projects might be a good idea. So let's put them on the list. We'll take a look at the price action. We'll get Ondo on the list. We'll get Mantra on the list. And if we look at some others like Pendle should be a good one too. $740 million market cap, still a little large here, but its value proposition is hot. I would suggest that, you guys do your financial research, guys. Do your research, do your deep dive research on all these projects. And if you do have any projects you want me to cover as far as deep dives, join the Discord. The Discord has a lot of good options, but one feature that is really, really good is that you have the ability to request a deep dive. And I do deep dives every Sunday, and if you join, you can vote on the next deep dive. Right now we do have a couple ones doing very well. We have DEAI and we have ATH basically battling out for the first top spot. Now, of course, in this case, I'm going to be the decision maker on which one, but if you want to be the decision maker, join the Discord and make a request or make a vote, and you can even request any other projects that I don't have here on the list so we can get those voted upon. All right, so let's move back into the list here. We got Pendle. I would like to look into that, and as we scroll down, there are some interesting ones like Origin Trail. Being able to verify information, the origins of certain information, truth, trying to figure out, basically allocating value to factual information. I find that to be a very hot narrative. And upon a retracement now, we see it's in a bit of a dip, is down approximately 2%. That could be an opportunity, but look at this market cap, $267 million market cap, means that even a 10x would only bring it to about $2 billion, which is, still possible, very decent, right? I'm expecting that could be very possible to happen. But again, it's somewhat on the larger side. It's not a large cap. In fact, some people might even call this a small cap altcoin. It is on the small side. But if you're looking for micro caps, we got to keep on going down. I would classify a micro cap around $50 million market cap. That starts to get where you get a lot of the volatility, a lot of potential gains, but also a lot of potential losses. But if you do research, you can make some great gains there. I like Origin Trail, so we'll put track on the list, and then we'll keep on going down. Goldfinch is an OG here on the channel, guys. I've sniped OG Goldfinch GFI last year pretty much, and since then it's been doing very good, and you can see the price action showing a lot of strength. So let's take a look at GFI Goldfinch. A project that focuses on basically it's a lending protocol using real world assets as collateral for lending. Interesting stuff there. Chromia got a bit of attention. True Fi also has been getting a bit of attention. What else do we have there? We have Maple, guys. Maple, what's going on with Maple? I'll give you an update on Maple. Let's do that one. Maple is a competitor to Goldfinch. I think it's decent, has a lot to offer, and the price action has been killing it in the last little while, and for me that's a really good one. Let's keep on going down. We have a lot of people talking about Prop C. These are projects that a lot of people are buzzing about lately, but the price action hasn't been the greatest. So, sometimes price action is king. I do appreciate, basically a community. I do appreciate them, but if price action is not, following suit, then there's nothing we can do about it. We got to understand that price action is king at the end of the day. If we're making lower lows and lower highs, the trend is your friend until the end. And when we see a signal of a potential reversal, yeah, maybe we can get into a bit of Prop E and so on and so forth. Let's take a look at Nexera, NXAR. That's one that I've been ignoring for a little while. A lot of people have been talking about it in the past, so maybe we can take a look there. I got a bit of a list going on. Canto's another one that has been looking good, although the chart is red over there based on that double top and on that retracement. But if you look at the overall structure, we're doing still okay here. It's still grinding to the upside. So Canto doing okay. Let's get that one on the list. And then if we keep on going down, we have Lena. That's an OG. It's been around, so consider that one. And maybe transitioning slowly into the real world asset narrative. And then if we come down, we do have Prop S and so many Prop S, and we have Prop E, and we Prop Y, and then we have Prop C. A lot of different props type of scenarios. So this is where things get a little bit confusing. So we'll stick with Prop E for now, and Prop C is another one. So maybe we'll put it on the maybe. If we have some time, Prop C. What else do we have here? We're trying to diversify our portfolio. As we get down, I just want you to notice. Look at the market cap, guys. Market cap now we're at about $10 million market cap. This is a micro cap. This is where you get into the basically the degen space of crypto. But if you're able to snipe a good entry on some good fundamentals, it's likely this thing goes to, let's say, $200 million market cap, which is still a small market cap, guys. You can easily make a 10x on this, on one of these projects, getting into some good fundamentals. A lot of people talking about those Prop Cs. And what else do we have here? We keep on going down. There was a couple others down here, but you can see it starts to become a little bit scary. $2 million market cap. Now you're taking a bit of risk. So position size matters at this level, and you got to make sure that you're paying attention to some of this, because really it could come at labs, I don't know, V2, and what is this? And we start to get into a little bit of a Realio, but Realio is not fair here because I think it's at about a $50 million market cap, but it's not listed on CoinGecko. That's one of the issues with some of these market trackers, is that we rely on them to be up to date, but sometimes they're not. But we have to put Rio on this list. So real world asset narrative, Rio basically exemplifies that. It is a larger a market cap. I forget its market cap, if it's 50 million or not. I don't remember it off by heart, but nonetheless, I think we should take a look at its price action to see what it looks like. So let's take a look at Rio. Let's put it up a little bit earlier so we can go by market cap. And as we go through some of these charts, we can focus on the fact that we're getting into more of a degen scenario. So Realio. All right, so let's jump right into some of these charts. Let's quickly take a look at Bitcoin. Guys, I'm going to take a macro perspective and just quickly talk in general. I did release a video about the project, about Bitcoin earlier on today, so feel free to go check that out. But ultimately, we do see, a scenario where we made a slightly higher high based on local price action. Okay, so this is something that is, something needs to be considered. Is it a change of character? And then if we come down and make a higher low, we go for another higher high, and then we probably test the range highs once again, right at about 72K and start breaking out. But if we get onto the weekly, you can see that really what this looks like is a retracement, a bull flag, impulsive move to the upside, bull flag, and then continuation to the upside. And it's likely that we see this continuation actually happen perhaps in a couple months, perhaps walking into September. Maybe we see it start a little bit earlier or later, but it doesn't matter, guys. Be prepared either way. I would like to see the momentum get a bit of support here on the chop zone, which is at about the 50% mark on the momentum oscillator, and then maybe get these EMAs and everything here on the trend crossing to the bullish side and getting a continuation to the upside. This is what we really want to see here in the crypto space, and we're getting a lot of good fundamentals from a macro scenario, politically, obviously economically, and obviously seeing a lot of mass adoption with regards to institutions getting involved. And this is all basically an indication that the retail investor could be swarming in at any moment here now and looking for software solutions and investing in these software solutions. So obviously here on the channel, we'll try to stay one step ahead, guys. And if at any point I offer you any value, do the channel a massive favor and slap the like button. All right, let's take a look at some of this. Let's take a look at Ethereum, the heavyweight of altcoins. Let's see what's happening there, big picture. We can see that ultimately it's doing the same thing. And in fact, its consolidation is not retractive, it's sideways. So the bull flag is showing a lot of strength in here. The bears do not have the strength to push it down and make a lower low. It's basically going sideways right into this level, not making lower lows, double bottoming, double topping, going sideways in a nice channel. And that is a very, very strong bull flag for continuation to the upside. And look, you might be looking at a class A bearish divergence, which is very evident here, but it could easily get invalidated by seeing the price get back to the previous highs. And in fact, we could see the momentum get overbought once again and go for a fat extension to the upside, hitting about easily getting about to about $5,000. And then from there, slow grind to the upside, or another consolidation, another impulsive move to about 10K. A lot of people have a 10K target for ETH. So big picture talk today on ETH, on Bitcoin. Really, we do have a lot of evidence that big picture we're going to continue to the upside. And as long as we maintain this structure and this position, the way we're kind of consolidating here, we have no choice but to remain bullish until there's evidence and proof that we're rolling over. There's none right now, to be honest. All right, so let's move on from there. Let's Bitcoin dominance. Let's see and we'll take a big picture perspective on that one as well. Let's get into the monthly so we can see big picture. We're grinding to the upside still, but we are slowly hesitating here. We're not going with the same strength. You can see we're overbought, volatility. Yes, we're hitting the mid zone on the chop zone on the momentum, which means that we could slow down for a little while. In fact, we could even come down and see this thing roll over. Now, we know that from this level, which would be between 55% and 59%, we could get that reversal. And a lot of people have the 59% target. Obviously, the Bitcoin bulls have that 59% target. For me, it's not about looking for a specific target. I'm looking for a general idea, general scenario where I can start allocating capital correctly without risk, right? And this level, I'm not willing to see if Bitcoin gets to that. It's not enough for me. If you happen to buy Bitcoin bottoms, market bottoms on projects, and you've been doing very well, guys, you're not going to be nickeling and diming and fighting for the last little and squeezing the last little move to the upside. I would be very, very skeptical on looking for entries, long entries at this zone, especially on Bitcoin, because Bitcoin has done a really great job. Now, Bitcoin could definitely move to much higher levels, but look at what altcoins can do once we kind of let's say, hypothetically come down to this zone. Altcoins will rally up and outperform Bitcoin. We know that in an altcoin season, altcoins run and they outperform Bitcoin by a lot, right? So this is something that we have to keep in mind. Altcoins are where the magic happens. So let's keep an eye on that. Obviously, big picture, we're waiting for altcoins to get their move, and we're waiting for Ethereum to lead the way, to show some strength against the market. And right now we see Bitcoin dominance kind of hesitating here, trying to figure out whether it's going to break down and give us an altcoin season. All right, guys, let's move on. I'm doing this quick so we can get right back into some of the charts here, taking a look at some of these narratives. Today, we're talking about the real world asset narrative. We talked about the gaming narrative. Now we're going to start looking at the real world asset narrative and asking ourselves which projects should be decent, which ones are being buzzed about throughout the market. And there's a few. Obviously, we're going to talk about larger caps and slowly trickle down to the lower caps. And we have to make a decision, guys. How much of our portfolio are we willing to allocate to those micro caps? Yes, they offer a lot of reward, but they also offer a lot of risk. But if you get into larger caps, they have less reward, but they offer less risk because they're a larger cap. We have a lot more diversity into the market, meaning we have institutions potentially involved. We have a diverse or well distributed amount of wallets. The capital or the tokens or coins are distributed amongst many wallets, which means that we're nice and diverse. We have a lot of stability, which is, you know, sometimes very healthy, especially if you're in the market. So diversifying your portfolio based on market cap is not a bad idea. Let's take a look at Ondo. This is a big one, obviously the largest cap altcoin in the narrative. Just keep in mind that you know, has been doing very, very well. This is the monthly. Just keep in mind, this is the monthly. Okay, let's get back into the daily, because that's usually where I start trading, is the daily. Start looking for entries, and then I get in and out of the market based on the 4 hour. But the daily, guys, the daily has been doing great. Now my entry has been was pretty good. I took a bit of a punt right on this dip, right around this level, and then we're going sideways. We went sideways for a little while. We were getting a little bit of divergence, but we neutralized the divergence during the times where Bitcoin and the rest of the market we're looking super bearish. And then all of a sudden we got a nice rally to the upside. And then really all we did here is back test this zone, which is great, which is fine, guys. This gives us a sign of, you know, using previous price action as support. And that way we can put a bit of confidence in this level that we are not going to be coming down much more. The only thing that we could be looking for is another double bottom, another sweep of the lows, or another touch of this bottom to give us more structure, to give us more confluence, to give us more confidence in the fact that we're not going to be making lower low. And as we get that bottom, a confirmation low, a higher low, or a double bottom, we can start deploying more capital with more confidence. And we can see we got a bit of an ABC correction, one impulsive move, sideways price action, impulsive move, ABC after an impulse. And after the ABC, we're definitely down to about 786 retracement using Fibonacci, swing low to swing high. Let me get rid of the oscillators here for a second so we can focus on price action. And then we could look at Fibonacci, swing low to swing high. And you can see that we're down to about the 786. If we zoom in, you can kind of see here 786 more or less, which is fine. But is one touch enough? This is the question, is one touch enough? With one touch, we expect a V recovery, which we're kind of getting, to be honest. We quickly recovering, and the question is, do we go straight to all-time highs and get into price discovery in one go? Or are we going to consolidate here? Are we going to form a structure that suggests a pivot point? And those structures are Adam and Eve patterns, inverse head and shoulders, W formations. Obviously, with a bit of divergence on oscillators, you get confident. And if we have indications of horizontal support, which you can kind of see, we've been respecting this level so much that I feel like we should emphasize its importance by making it a little bit thicker here and making it, you know, 4 pixels. So we'll make it a bit thicker and emphasize importance here. But really, what about another impulsive move down? That's the risk you take. That has to be in your mindset at the current moment. What about if the trend continues to be our friend? Which, you know, if you're a bull, it's not really your friend at the current moment, but you get what I mean. The trend is your friend until the end. And the end of the day, we're making lower lows and lower highs still. So what we need here is an indication that the price action is changing the character. We want to go from a lower low, lower high scenario to a higher high and higher low scenario. And sometimes during that transitionary phase from this from a downwards trend to a upwards trend, we get into a sideways or some sort of structure, which is what I want to see here. I want to see the structure that shows us that pivot. And usually it entails building some sort of divergence. It entails a structure, like I mentioned, W, inverse head and shoulders, you know, cup and handles, Adam and Eves, and so on. So these are the things that we need to be patient for if we're going to be building big positions. You don't want to be taking risks, guys. That's not what we're here for. We want to be able to scale in with a great risk to reward ratio. Let me make this stick again because I pushed backspace, and that's that. And I want to kind of zoom in here and just kind of show you that this is what I'm waiting for. Now, if we can build a structure, we can put a stop loss in. We're going to need a stop loss underneath the structure if our position size gets bigger. Okay, that's something to obviously acknowledge. Stop losses are important to mitigate your risks so that you know where to invalidate your bullish thesis. And ultimately, as we're coming down the momentum line is not really giving us anything important. As you can see, basically we're making lower lows and lower highs as well. Nothing suggesting divergence on any of this. So we got to be patient here, guys. We could be looking at the lower time frames. I wouldn't be looking at the lower time frames right now. I'm expecting a 4-hour retracement, basically looking at the 4-hour chart and looking for a bit of a dip. And you can see that we are getting divergence right into here. And this is not specific to Ondo. In fact, it's specific to the market in general. We're seeing it on Bitcoin. We're seeing it on a lot of the altcoins. So I wouldn't mind scaling in based on the 4-hour. But big picture here, guys, there's a lot of strength. Now, I'm going to be saying this honestly. All you're doing is buying a retracement. It's a 786 retracement from this low. But just keep in mind, look at where this thing came from. A lot of the emotional individuals are down at this level. Are we going to hunt liquidity here? Or are we just going to hunt liquidity here? Or are we going to hunt liquidity altogether? Are we done hunting? And there's so much bullishness that people bought in, or people are going to be buying in right around this level and continuing to the upside. This is the risk you take, right? It's because we did get into a great retracement here, but is it enough? Is it done? And if you look at the momentum, where we barely got oversold, so the risk you take is that we see the momentum get oversold. Really, if it gets oversold, if the purple line comes down here below the 30% mark, this is where you get the majority of the impulsive move to the downside, which is where you should be thinking, you know what, if we do get that, that's where I should be buying the dip. That's where the risk to reward ratio is the best. That's where I can gain a bit of confidence that the bears are done, given that we're slowly trekking downwards and making a lower low right here. You can see that. What about if we go sideways a bit and come down for that lower low? Would be an unfortunate scenario. And if we look at that, it would be fortunate because we could buy the dip and we can be looking for entries. And it's likely, if that were to happen, either we test this bottom, and if on that dip it comes even lower, you never know, guys, we could get back into this level and test this bottom, this horizontal once again, and hunt liquidity into the price action looking left, because we know we have some volume, we know we have some market participation, and we know we have some emotional individuals at that level. So guess what, guys? DCA, buy a little bit around here, buy a little bit down here, and hold on tight, because obviously Ondo eventually is going to reverse with the rest of the market when we get back into the bull rally. So Ondo right now, large cap, doing pretty good, decent retracement, not testing major liquidity levels, but definitely looking for a horizontal support to get a bounce off of. The question is, how much do you get in right now? DCA, nice and slow. Let's move on. Ondo, pretty good. I'm a holder on a lot of these projects, but not Mantra. Unfortunately, I did not get into Mantra. Obviously, there's always regrets into the market. There's always scenarios where you wish you would have bought. Obviously, you can't, FOMO in. You can't be like, you know what, I missed out, so I'm going to just be going in all in. You got to be waiting. You got to be very patient. This thing took off. It took off without me. It may have taken off without you, but let's see what we could be expecting in the immediate short term. The only way that I'm going to be getting into this project is upon a retracement. That's all I'm going to be waiting for. If I don't get it, I'd rather miss out. And I'll be honest on that one. I'd rather miss out. And there are lots of opportunities in the market to watch out for. Let's make this a little thinner so we don't clutter up the chart too quickly. And I'm questioning why we don't have, I know why. Let me get a better chart. It's because of this particular chart that I chose does not give you the volume profile for some reason. Let's try that again. Let's get into Mantra. Try it again. And I'm wondering why I don't have a chart already. Mantra. Oops. Let's see. Yes, this is these crypto ones. They're brought to us by TradingView, and they don't give you, for some reason, that those some of the indicators don't work. So let's kind of scroll down. Let's see if we can find Mantra on a big exchange. What's the biggest exchange I can find here, so we can get something with volume? Okay. Let's do KuCoin, Mantra DAO on KuCoin. Is Mantra DAO and Mantra the same thing? I would assume so. All right, so let's do the KuCoin chart. This one, this is Mantra OM. Sure, let's do this one, Mantra DAO. Hopefully I'm doing the right one here, guys. You know what? Let's check CoinGecko just to make sure. It's not one that I'm familiar with too much because obviously I don't have a position. Mantra OM. Yeah, that's exactly it. All right, so let's do that one. Let's do the KuCoin chart. Let's get rid of this one. And let's do the Mantra chart on coin, this one right here. And let's get that horizontal in as I was doing. You can see now we have the volume profile, which is very, very useful. And I'll explain why. Now we can see that horizontal is important. Let's make it a bit thinner as I did the last time so that we could not make it so cluttered so quickly, and make it thinner. And we can emphasize importance by making things a bit thicker when they're important, right? This is another level that I'm interested in. If we get down there, and we can clearly see that we have a volume gap, a sense of weakness into this level. If we break below here, we can come down to this level here at about 35 cents. And at 35 cents, that's where we can get support. We fall through this volume gap, empty weakness right here. You can see that. Look at the volume profile, a massive gap. Now, the important aspect is upon a retracement, how low are we going to go? Do we actually break below this and come follow through and get down to the lower levels, maybe hitting about 35 cents? Is it even possible, guys? Anything is possible. But guess what? I'm curious as to how the price action is going to hold up once we get to, let's say, right around here. And the only reason why is because we have tops. And I'm excluding the wicks or the tops on purpose because there's not a lot of volume. And for that matter, there's not a lot of volume even into the bodies right into here. As you can see the volume profile, let me kind of scooch this over and make the volume profile a bit more evident. And let's just look at price action here for a second. You can see that there's not much even happening in here. The majority of the volume kicks in right around this spike of this node of volume right here. So I'm curious as to see what happens and if we decide to see the price come back down and eventually start hitting these lower levels, right? Coming down a little bit on a retracement. And if we come down and back test this level, if we get support and continue to the upside. So if we do bottom out here and get signs of structure or some size of support, we might want to build a position and buy in here because that might be the last level. But the reality is the best zone to watch out for is here, right into this level where you have emotions, which is the volume gap. Let me make this red so we can emphasize its importance, obviously, as a weak spot. And we can just put some green arrows in here because we want to emphasize, like, look, if we do come down here, we want to be able to buy the dip. This is a great risk to reward ratio opportunity because if we fall through the volume gap, you can put a stop loss and get out. And then if it comes down and it falls through the volume gap and gets support down here, guys, we have a lot of confluence looking left as well, a bit of volume kicking in, and we could buy the dip and reaccumulate at these levels. So I like this zone, but guess what, guys? If the bull market starts tomorrow or even in September, is it likely we have this is a daily time frame? How many daily candles do we need? How quickly could we come down to the downside and eventually maybe come down here? I don't know if it's even possible, guys. Mantra right now is looking pretty bullish, part of a really bullish narrative, obviously the real world asset narrative. It's pretty much the first layer one that is focusing on a blockchain that is catering to the real world asset narrative, which is could be enticing as a value proposition. And really upon a retracement here, we're looking at pretty much a 0.382 retracement, which is just considered a breather. If we use Fibonacci, swing low to swing high, and assuming that this is the top and we don't continue to the upside, we're coming down, right? We're pretty much at the 0.5 fib, maybe golden pocket, maybe we come down to that level, but at the current state, we're still doing good. If you think about it, you're buying the top. So buying in right now is not recommended, guys. Right now we were in a expansion move to the upside. And if we use Fibonacci to kind of define what kind of expansion we already hit, it looks like a 1.27, 1.618 extension. You can see that we hit the 1.618 very clearly, and we're currently hesitating at the 1.27. So the reality is this is profit-taking zone. That's where a lot of people, start hesitating and taking a bit of profit. So you know what I'm going to do? I'm going to put some arrows in there. And what I'm also going to do is just kind of put it right into here. And I'm going to make these red to be like, look, if you happen to buy, it's not a bad time to take a bit of profit, even if it's 10%. Trail up a stop loss well into profit. Wait for some structure right into here. If we have structure, put the stop loss underneath the structure with a bit of wiggle room below and anticipate that we continue to the upside. However, if we do get rejected and come down and look for some support off of these tops right here, this one right here and this one right here, at least you can stop yourself out with a bid and then come back and reaccumulate on this dip, or even at worst case scenario reaccumulate here or even here, depending on how far we come down. If we do come down, it's all about the if, and now we can look for evidence suggesting if. Price action, guys, it's not showing us that we're coming down. The way this thing looks, all we can prepare for is a healthy breather. That's pretty much it. A healthy breather, in my opinion, is just basically looking for a 0.32 or something like that, nothing major. So it looks like it's already doing the job. It's already in that zone. So sorry guys, I'm just going to put this green arrows. I don't know why I keep on backspacing too much. I think yeah, let's just put that in here quick. All right, let's put another one up here. This is profit taking zone. So really, guys, any dips, you got to, take the risk unless we come down to these levels. Let's take a look at oscillators here for a second. You can see everything's overbought. Everything's very overbought. So it's risky getting in right now. I understand it's very risky. The momentum, the volatility, the expansion, everything is overbought. All oscillators on the multi-momentum oscillator that I got here going on. Guys, if you want more information about this oscillator, there's links in the description. Join the Discord. I got lots of info on this custom indicator that I created, but it looks very overbought in multiple ways, right? So we got to be very careful here. I would expect a short-term dip, at least the 4-hour, to get down to an oversold state so that we can be buying the dip with a bit of confidence. Right now, everything is looking overbought. For all I know, we could continue to the upside, guys, but am I willing to take risk right now? Absolutely not. I made a rule for myself earlier on in my trading career saying I will never buy tops. Never buy tops, because I'm not exit liquidity for anybody. And if you know what exit liquidity really means, it means that for every winner there has to be a loser, meaning somebody buying the top and giving your capital to somebody to be able to take profit and become profitable. And I'm not going to be that person. I'm not going to be funding somebody's portfolio, and neither should you. So always think about that. What you're really doing here is providing liquidity to the market so people can take profit. Okay, so think about that. Let's move on. Everything's overextended. I wouldn't be getting into this at the current moment, even though I am bullish. I like the idea. I'll be waiting for a retracement. And if I don't get one, so be it. I'll move on, find something else. Let's do that. Let's take a look at Pendle, another one that is showing so much strength in the last little while, bringing in traditional trading instruments into the crypto space. And it's a good indication that it might be successful, given the fact that it is successful in the traditional financial markets. Now, down at this level, I was like, guys, if we can find structure, that would be awesome. And I was trying to give you a bit of a lesson to say, look, if we get a bounce here, great. We got a bounce, guys. We got one, a pretty strong one. Do we come down for a lower low? We might come down for the lower low. It's all possible. But guess what, guys? This thing got to bounce right at the horizontal line. That's it. And now we're done. This painting is over. I wanted and luckily I was able to get my first entry, one entry on this dip. Obviously, it's going to be a small one, because if you guys know, my strategy is upon a horizontal touch, I get in with small bags. Right? I'm not getting in with betting the farm until I get structure. And now I'm still in the mindset that maybe we get a rejection right around the zone. Hopefully we do. I'm not trying to be bearish. I'm just trying to pack my bag, right? Just to prepare. But if we do, great. And I'll be buying the dip. And the question is, how much lower can we be going? Like, if we do come down to test this level once again, maybe look at this nice V recovery. And I've been seeing this pattern significantly. V recovery. What about a rejection, rounded bottom, and come back to the breakout zone? Then we start looking at an Adam and Eve pattern, guys. Adam and Eve patterns have been showing up significantly in the last little while, so we could expect that to happen, maybe. But is there any clear indication of a rejection here? Maybe a little bit of a volume gap, maybe another bit of a volume gap. But guys, there's nothing really suggesting anything. I'll be honest, the volume profile is not giving me an edge. There's no edge. There's no signs of anything other than, a couple of a top here, a bottom here, and maybe this is the zone because of these tops and bottoms. But if you look at the volume profile, all we have is this little empty volume gap, which is still maybe enough. Okay, so let's just keep in mind that we could come down, or we could break right through this and go to the highs. I'm not getting an edge, and this is one of the issues. If you do not have an edge in the market and you don't see anything really specific that's giving you an edge so that you can trade the market a little bit more accurate with confidence, guys, it's better not to get into a trade. The only thing that I can say based on market conditions and market structure is we made a lower low comparison to this one, lower low. We have lower highs, and the likelihood is the trend is our friend. We come down for another lower low. Okay, that's all we got. And based on the trend being our friend, guys, it's likely that happens. Now, what about if we do come down and make a double bottom or an Adam and Eve pattern, like I mentioned, then we start to get the beginning of a change of character of the structure, particularly if we make a higher high above this one, right? Because then we made a higher high, we come down for a higher low, higher highs, higher lows. We start to look at this as a pivot. Okay, so we're early, guys. We're early here on Pendle, but we're at a good level given the fact that we're using this previous price action as potential support with a decent amount of volume right into this level. That's all you really got, guys. And if you look at price action looking left, really that's quite a bit, right? That's pretty much what you're really looking forward to. Now, if we kind of zoom out again and we kind of look at the next level of potential support, guys, the reality is the majority of the volume or the majority of the emotions are all the way down here. This is where liquidity can be hunted and induce max pain, right down here. So what I'm going to do is I'm going to put a horizontal line also here, just to be like, guys, you can't neglect the fact that if the market wants to induce pain, it has to come down here. If the market wants to induce a little bit of pain, we got to break through all of this and capitulate these individuals. So let's put a horizontal right into this structure to suggest, like, look, this is support, right? This is where we want support. This is where we want to be buying the dips all in this level, because we are in a retracement. The question is, do we come down for another lower low? Do we come down for an extension level, 1.27, 1.618 extension, and maybe come down and be able to buy the dip? High, swing high to swing low to swing high. We get down to the 1.618, which is right around this level at the bottom, right at around the zone. So we have some confluence with these bottoms. Is it actually going to happen? That's the question. So instead of waiting to see if it is going to happen, my opinion is this. Obviously not financial advice. I do put my money where my mouth is, guys. I did buy the dip here. And I made it known on the Discord that I bought the dip right around this bottom structure while Bitcoin was creating its bottom structure. I bought the dips on all kinds of other altcoins that I wanted exposure on, and Pendle was one of them. Now, upon a bounce, great, my positions are in the green. But what about a retracement? What about a buyout opportunity where we come down on the 4 hour? Even if we make a higher low, all good. I'll get that confirmation low, higher low, and double down, deploy more capital, and then anticipate a full recovery to the upside. That's the only way to play this market. The volume profile is not giving you too much. All we have is market structure looking left, and then that's pretty much it. Let's take a look at the oscillators real quick to see if we get anything into that. Let's take a look at momentum. Could we get oversold in a bigger way? We got slightly oversold. No bullish divergence just yet. So we could come down for another dip and get that bullish divergence, and that would be good. Even if it's class B or even class C bullish divergence where we double bottom on the momentum, that would be totally fine as well. But we need something else here other than lower lows and lower highs on the price action and lower lows and lower highs on the momentum. That's just following momentum. Everything is just going in a direction, no signs of divergence. And look at the volatility, the orange line, very volatile, very confluent with the price action. Now we're pushing up. It looks like the bulls are done. From volatility perspective, I would like to see the orange line come down to oversold conditions and get an indication of what the bears have left in them. That's the reality. If the orange line comes down to oversold conditions like it did from here to here, look what happened from here to here. Big impulse. From here to here, big impulse. Look at both impulsive moves to the downside. Every time the orange comes down, orange comes down, orange comes down. I want to see if we make a lower low. If we make a lower low, guys, the trend is your friend. We're coming down. Be prepared at lower levels. So I would wait a little bit more. I would wait. Now, obviously, waiting, there is risk associated. You might miss out. Fear of missing out. Of course, we might break out right now, continue to the upside, break above $6, $7, and keep on going. Who knows how high we're going to go? But that's the name of the game here in the market. Nobody knows exactly where we're going. The only thing I'm saying right now is the trend is your friend, and we're making a lower high as of now. And I believe a structure is due to be built to give us the confidence that we're pivoting to the upside. So I feel like we have some time here on Pendle. It does look good, but I'm not willing to take risk just yet. All right, guys, let's move on from that one. What else do we have here on the list? We got Pendle. We're coming down with regards to market cap. Let's take a look at Rio, an OG in this space. I covered Rio last year. Entries were absolutely epic. We've done really well on Rio. A lot of people buzzing about it. Lots of good stuff here, but it's definitely in a heavy retracement. ABC looking type of retracement. This is where we were scaling and building the majority of our position was all the way down here. I was really, really bullish. I did deep dives. I was covering it almost on a weekly, twice a week basis. And all of a sudden, look where we're at. Looking for retracements, looking for buy opportunities, particularly those individuals on the sidelines, looking for, healthy healthy pullbacks. Now, this looks like an ABC type of correction move, right? It's not, perfect, but it's there, right? Because we came down and then we bounced up, made a slightly high, and then come back down for a lower low. And now we're starting slowly to approach a level of which we can start getting horizontal support. And obviously, it all depends on market conditions with Bitcoin and Ethereum as well, overall, right? That's what we want to see. But we do notice that in this zone, we have a node of volume right here. Now, could we come down for a little bit more and hit this node of volume and try to hunt liquidity at this level? Because this means that there's people here that bought the dip and some people didn't take profit. Really, my profit taking zone was here. It didn't reach it, unfortunately. It doesn't always happen, but sometimes it does, where it doesn't reach my profit-taking zone. So guess what, guys? I'm hodling through this. I'm hodling through this like everybody else, taking it on the chin and looking for opportunities to scale up my positions for the next move to the upside. Because then when that does happen, guys, I will be deeper in the profit. That's really what we're here for, is to build positions at opportunities where we can buy on the cheap. And I can see that right now. Now, really what I'm worried about is that we do come down to about 80 cents. That's really what I'm really interested in. Now, if the market does take a 4-hour dip, and like I've mentioned here on in the last little bit, that if we see a bit of a retracement, we could even come down for a lower low and come down to these levels. But right now, right here is still not a bad idea. It's still not that bad. And guess what, guys? I did buy the dip on this about 2 weeks ago, a week and a half ago, right into this level. And those positions are in the green. I also made that very clear on the Discord that I bought the dip. Now, the question is, did we make a higher of any sort? Is there any structural change of character here that suggests that we're ready to pivot to the upside? Absolutely not. All we do have is a bit of a recovery. And it does look like very V-like, a little bit V-like. Not so rounded, but it does look very aggressive. Now, if we come down and we make that rounded bottom, guys, Adam and Eve pattern that starts to show pivot. If we get bullish divergence, this looks good. Maybe we even come down for a lower low for all we know with class A bullish divergence, but there's not enough data to suggest that's the case just yet. So we're a bit early. You can see this across the market that a lot of the retracements are slowly in a level where we could see confirmations, but we're a bit early. And sometimes getting in early, that's where you get the best reward. But position size, guys, be careful, because we don't know if we're going to make that lower low and come down to about 80 cents, like I mentioned. Volatility is overbought. We see the trend of the momentum basically trending sideways in the chop zone. Not a good look. I really don't like trading the chop zone, to be honest. That's where you get chopped up and spit out. That's where you get, wrecked in the market. The market tends to hunt tons of liquidity during sideways price action like this, where there's no volatility. We're getting volatility, but the strength of the volatility is not there because the momentum is going sideways. We want the momentum to go in a direction and then trade the volatility, right? We want volatility. Traders make gains when there's a volatile market. However, we want it to be trending in a direction. If the volatility is not trending in a direction, which way are you going to trade it? This volatility, sideways means you're in a stable coin unless the range is really large, where the range in the sideways is large and you want to trade the range, that's fine as well. But that's rare. That's not very common, right? So think about it. Right now, we're kind of going sideways with regards to momentum, is making slightly lower lows. That is a sign of divergence in the sense that it is a class C type of bullish divergence as we're trending downwards. The momentum is kind of going sideways. It is a slightly lower low. You get what I mean? We're looking big picture here. I want to see a bearish response. Really, I want to see a bearish response. Why? Because the volatility is overbought. And what about if we get oversold again, like we've done so many times? And given that the momentum is going sideways, there's no sense of urgency, in my opinion, to be going in taking risk at the moment. The trend is looking a little bit better than the momentum is, because at least we're slowly trending to the upside. EMA is facing up, green histogram bars, and there is a bullish divergence identified here on the oscillator with a green dot suggesting confluence across the board. So this is really good regard to Rio, but no major indications of a bottom, but definitely good buy the dip opportunities, maybe scaling in 10 to 20%. However, guys, upon this little bounce here, things kind of change. The time to buy in was down here. And if you look at the videos on the channel, I talked to you about Rio when we were down here. And this was a good zone to start DCing. Now you're buying a bit of a pop. And I know it's only a little one, but if you look at what's been happening and you take a measurement, more or less into these bodies to where we are right now, it's up 31%. Right, 31, which means that even if it came down to a golden pocket, more or less on average, we might see a 20% correction. right? And then you can get a 20% discount. Those are double-digit dips. Those are opportunities to scale in further, right? Just a golden pocket retracement from here would bring you down to maybe a 20% discount, which would be great regardless. Okay, really the reality is it's a 65% discount because golden pocket is a 65% retracement from its previous highs. So you got to consider that. Not bad of a scenario, guys. We're okay here. Big picture, zoom out on Rio. Nice retracement, really bullish impulsive move, part of a strong narrative, as I mentioned. And tokenization of real world assets is a decent value proposition going forward for the crypto space. I know it's not a shiny new really enticing narrative, but guess what? It has a lot of value. The value proposition is there, its utility is there, and when there's use case, token utility improves, and obviously mass adoption, because it has a purpose. When things have a purpose, people tend to flock to it. All right, so Rio is looking good. Let's move on. Let's take a look at what's Track up to. Let's take a look at Track. These are decent projects. We're getting lower in market cap, and this is where we start to get into a level of which things start to get a bit more risky, but still very rewarding. Look at the retracement, guys. We talked about Track, Origin Trail. I like the project, so let's look at price action first. Retracement is nice and deep. We're getting to a level where we got some emotions, not a lot of volume either. But I don't like the way the volume profile's setting up right now. I don't like it because there's too many nodes of volume with no certainties anywhere. Okay, so when you see this, lots of little nodes, lots of little volume gaps, we're gonna have to be hesitant. What we have to put more emphasis on now is structure, not so much volume gaps, because there's too many little ones, and I don't know which one is going to hold. If there was a clear one big, thick one, that would give us a lot more emphasis, right? Right now, there's so many competing levels that I'm not willing to take chances on any of them until we get structure. Now, if you look at what's happening here, we're making a bit of a double bottom. We also got a double bottom here, but we rallied up and, failed the breakout and then came back down for a lower low. What's the difference between here and here? That's a good question. Number one, obviously, we're at a lower low, and maybe as these lows come in, the probability of a reversal increases. But other than that, there's nothing. There's no price action. There's very little right into here, as you can see, based on volume. One node here, one node here. That's pretty equivalent. So which one is going to hold up? That's the question. Look at the volume down here into all of this price action. Very low volume. Not much market participation really happening here, unfortunately, because if you exclude all of this from the screen, and you just look at this, you can see, let the volume profile, you can see that it's pretty much the same. There's nothing really happening. Look at the volume, the same all throughout all of this. And because we're making lower lows and lower highs, this is sell pressure, no higher highs and higher lows. Now, the double bottom gives us an indication that maybe we have a structure here that we can deal with. I don't like the wick. The wick shows me, a bit of capitulation, but also manipulation. So I don't really do like that. I don't appreciate wicks that large unless they're blow off tops or, in this case, quick reversal patterns like this one, V recoveries type of thing, which could definitely happen. So keep it in mind. So really the price action is not giving me any edge other than the fact that we're making lower lows and lower highs with a potential double bottom. Do we use it as structure? Do we put a stop loss underneath this double bottom and start building a position? Let's take a look at momentum here. In the momentum, obviously you can see we got these slightly oversold, very slight, like almost barely. Okay, let's be real. We didn't fall below the 30%. We probably tagged it and that was done with it, and we're making a higher low. Now if we look at what's happening here, double bottom, if you exclude the wicks, you have to exclude the wicks when looking for divergence. That is a class B bullish divergence right here on this double bottom, so it's not bad. At least it's not too bad. A bit of volume. Look at this whipsaw price action, straight up, straight down, which means that a lot of people got wrecked into this. If you look at this quick, longs and shorts got wrecked into this price action. So how many people are emotional at this level? Probably quite a few. And then we do have a very, very indecisive trend, as you can see. Indecisive, no clear direction, sideways across the board. I'm not crazy about it, right? I'm not crazy about it. The only thing that I'm crazy about is the fact that we retraced a decent amount, right? The retracement is real. You're not buying the tops. You're not, exit liquidity. You're none of that. The retracement is good. Even if you take the swing low to all the way to the swing high, you're looking at a 0.5 Fibonacci perhaps. Swing low, let's do this quick. Swing low to swing high. And you can see that we're pretty much at Fibonacci retracement, golden pocket retracements, which is good. Decent level. We came down even a little bit more than expected. Totally good levels to be taking a bit of risk. DCA slow. I would be getting into a small bag. and slowly deploying as I get confirmations. 10 to 20% right around here on Origin Trail. I like the idea. I like the value proposition. The market cap suggests good volume or good amount of growth in comparison to larger caps to catch up to those larger caps. But really, is the bottom in? No indication of that. Still lower lows and lower highs. We got to move on, guys. Don't take too much risk just yet. We want structure. We want identification of reversal. We want signs that the bears are done pushing down. Let's look at Goldfinch. GFI. GFI got a nice bounce right here. If you bought into these green candles, congrats, because really all you did have to do is endure a sweep of the lows that we did get a bounce off of this, cluster of supply and demand, and all of a sudden we're moving to the upside. My question is did we get bullish divergence into here? If we got bullish divergence into here, you got even another indication that we were ready to get a nice relief. The thing is, if you look at this, all we did is break above the previous local high, which is good because it's potentially bringing us a change of character here from a higher high perspective. Let's get that dip, make a higher low, and then get that confirmation low and run. Do we have to have that higher low? We don't, guys. The market doesn't have to promise you anything. But if it does happen, guys, I'm expecting it to get support right around $2.75, more or less, and $2.60. And if we get to that level, that would be the opportunity for you to buy in and slap those buy orders. Why? Because we have the 200 daily to act as support. We got previous price action, the previous breakout high that we've basically broke above and made that higher high with. And if we can use it as support, we start to consider this a pivot point, because now we're changing character of this price action. Instead of making only lower lows after an A, B, C correction, all of a sudden we're making a high, a lower low, and then all of a sudden a higher high in comparison to this high, and then we come down and make a higher low, and we go for another higher high, and the higher high and the higher lows becomes a trend reversal right into this area, which looks really good. Ultimately, this is what we want. And if we got bullish divergence into here, it's starting to look really good. Very, very epic. Obviously, we look for those reversals at good levels, and I put green arrows in here suggesting, guys, this was buy the dip opportunity. So hypothetically speaking, if you were able to get an entry on average right around here, let's say right in the middle of the two green arrows, and you're looking at your current position, you're up 21%. Great move. Nice move. Take a bit of profit if that's what you want to do. Plan out your next scenario. Lower time frame scenarios might be bringing down for a bit of a dip. Let's take a look at the oscillators and see what's going on. We're not overbought here on the daily, so means that we could go up for a little bit more. We did enter that zone very, very slightly, 70% mark, tagged it very lightly, but I feel like we could go for another continuation up to get into overbought conditions with a bit more strength here. So, and get some bearish divergence at least to suggest that the bears are done or the bulls are done pushing up on the daily. So it's not bad. However, high, 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 maybe come up a little bit higher. What do we see here? Lower highs, lower lows. Understand that this right now is in a retracement type of scenario, and it could be a very deep retracement, but eventually we start to get these bottoms, we roll over, we start to look for some sort of indications that we could be doing something like this, and then we start looking at a double bottom and roll to the upside, right? It doesn't have to be that deep. It doesn't have to be that exaggerated. It could even be a bull flag right into here and then continue to the upside. It could be many, many structural patterns into this level where we get that reversal. So right now, Goldfish, in my opinion, right into this area should be a buy the dip opportunity, because we're getting some signs of support. Now, if we break below the previous low, you got to get out, guys, because we're making lower lows. And the next level to watch out for is to test this zone once again. Basically to test the liquidity at that level. If we get to that level, that means that we're going to be hunting liquidity. The momentum is looking good. Look at the momentum, looking very nice. EMA is facing up, green histogram bars, everything is looking good. We're getting a purple expansion here in the background, suggesting strength to the upside. So I'm liking it, but should we be accumulating in the range, accumulating at this bottom? I think that we're getting close to a bottom here on Goldfinch. Guys, do your research. I do have a deep dive on Goldfinch if you're interested in. I will join the Discord, their Discord as well. Join my Discord so you can have a bit of a chat about Goldfinch. There is a bit of a concern regarding some FUD, but really I think it's going to be ironed out. It's the nature of the game. It's the nature of its value proposition that it has this type of FUD, which is, we know it's a lending protocol and there's defaults on loans all the time. The question is, how do we resolve these issues on defaults on loans? Defaults on loans happen even in traditional finance. Okay, so it's not exclusive to Goldfinch or Goldfinch as a crypto project. They just need to figure out a protocol some sort of way to resolve these issues that happen in lending in the lending environment, pretty much. Okay, so I like this level. Keep an eye on it. As long as we stay above this low right here, which is at about $2.14, I say that we're making a trend reversal right here. And the next area of resistance is at about $3.52. So be careful here. But if we break above and we slam right through to about $4.40, guys, price discovery, all-time highs, and all of that is definitely around the corner. So a quick reversal after, look at this nice retracement, guys. Just a quick impulsive move, ABC retracement, and nice consolidation and continuation. Next level, maybe we start hitting the $7.30. That would be my next profit taking zone. All right, let's move on from Goldfinch. I like Goldfinch, GFI, one of the projects that we covered really early on. Definitely entries were great. And then after that, we look at Maple, a competitor, right? Offering very similar value propositions. And obviously Maple looking really good. Maple at the current moment is down 2.5%, but you can't knock it. What happened here with Maple was really healthy from a price action perspective, from a TA perspective, whatever you want to call it. Look at the invalidation, how it was respected. The risk to reward ratios, guys, were totally respected. The TA was respected here, bouncing off that bottom. Now all of a sudden we're bouncing off tops or getting rejected off the top. Does it have enough strength? Do the bears have enough strength to get rejected? Or guys, are we going to be breaking out of these tops? And you can see the volume, very confident. Let me put horizontal right into here. Look at these tops, very confident with all this accumulation. Do we have enough strength, enough bullish strength to break above $17.75 so to start looking for a higher high? Guys, we made a higher high right here. Who's to say that we can't follow the trend and make another higher high and potentially get up to this level? And I'm going to zoom out here again, guys, just to show you the big picture opportunity. Look at all the weakness that we have into this chart, right into this area. All of this straight up price action, straight down price action, essentially leaves a volume gap right into this area where the price has the opportunity to run all the way up to about, $48, $49 very easily. Front run it, guys. Take a bit of profit as we get closer to that zone, because we're talking about major gains if that were to happen. And look at the structural support that we're getting here on Maple, guys. A beautiful scenario. And we're talking about from entry, green arrow, $11, $12 more or less, to where we're talking about here, $48 more or less. We're talking about 300% gains. Great move to the upside. You could have done really well just with a small bag right at this level. So if you're on the sidelines right now trying to find an entry, I understand the concern. The concern is that you have to kind of be playing this almost like a breakout trade. Why? Because you're looking to break out of this range. And based on volume, you can see there's a lot of accumulation. If we get rejected, who's to say that we can't come down back to the bottom of the range and hit $12 again, like we have done many times? And guys, that's the reality. As a breakout trader, you're basically buying the local top. You're not buying this top, you're buying these little tops. Now, do we have enough strength to break out? That's the risk you got to take. And you got to take it on the chin if it does come down. That's trading 101. How are you going to mitigate the risk, guys? It's very hard to mitigate risk because where are you going to put your stop loss? You're going to put your stop loss down here. And that's a big loss. You're talking about a dip, a decent one for that matter. If you get an entry right now and it comes down back to range lows, you're looking at a 30% discount back to this level if it were to happen. Now, if you look at momentum, you look at volatility is very overbought. Momentum got slightly overbought as well, just slightly. You can see it tagged the 70% mark. The trend is looking really good. EMAs are facing up with green histogram bars. Nice bullish divergence with follow through. So it's looking great. The question is, are the bears done? I don't see any indication. Sorry, the bulls. I don't see any indication that the bulls are done, but it's pretty much almost there, perhaps where we get that rejection. As you can see, as we speak, we're getting a bit of a dip. And if you look at the 4 hour, I'm assuming, look, we're getting divergence right here, double top, class A bearish, class B bearish divergence right into this double top scenario. And you can see that even the trend now getting a red bar, a histogram bar with EMAs facing down. So it could be that we see a bit of a corrective move here on Maple before we actually explode to the upside. Just keep in mind, we could go sideways for a little bit and continue to the upside and actually break out for once and for all, because again, the trend is your friend, and so far this little trend has been showing us that we've been going sideways here. But there's moments where the trend becomes not your friend, and then we go for a higher high. That's the thing. So Maple, keep in mind, market cap It is a lower market cap, right? Forget its market cap. So let's take a look. Maple right now is at $133 million market cap. It's still very small. Could definitely do a 10x, maybe even more, 20x. It could be very possible. And at the end of the day, if you zoom out again and you look at where it's at, guys, it is a newer project. Another thing to consider, and we can break through this volume gap and get into price discovery very, very easily here on Maple. I'm bullish, guys. DCA nice and slow. I know entries are not the best at the current moment, but instead of fearing to, basically the fear to miss out, get a bit of exposure and buy a small bag. That's it, 10%. At least satisfy the FOMO, and upon a dip, double down, triple down, accumulate big, heavier, and obviously do that deep dive research so that you can be fundamentally bullish. Let's move on. Let's take a look at something else. Let's take a look at Proppy. I know people buzzing a bit about Proppy and Prop C, Prop S, Prop this, Prop that, but really, I'm in on none of them, so I don't know much about it. Let's take a look at Proppy because I think that one's a good people are talking about it. I have an HTSX chart. I've never really covered this in a good while. Look at that dip, massive retracement, guys. We're talking about big ones. And really, I remember, talking about this maybe at one point where it's like, look, let's just wait for a retracement. And I'm going to have to really, be quick on this. But really what we want is structure here. We need to get, we're getting a bit of divergence. You can see right into here, a double bottom, slightly lower low. Okay, fine. And then we got a slightly higher high, a higher low. And then we see the higher lows also on the momentum. So we're definitely getting class A. If you even want to call it a class B, I would say class A. It is a lower low on the price action, higher lows on the momentum and on the trend. So it is a class A, but where's the horizontal support, guys? All we have is this. Okay, we can use that. A little bit of node of volume, which includes this as well. So this is not even that much volume. There's a bit, as you can see, a little bit right into here. Does this act as horizontal? The only fear that I have is that we're going to hunt liquidity at much lower levels, which starts about here and emphasizes more all the way down here at about 61 cents, 60 cents. This is where the majority of the volume is at. This is where the majority of the emotions at. This is where the liquidity is at, so that we can, so that it can be hunted and induce max pain. However, if we do get structure here, which we are getting signs of something, this is the time to get in, put a stop loss underneath, and expect a reversal. Right? Because we're getting divergence, guys. Both expansions. Let's zoom in here for a sec. You see the expansions, the red waves in the background, they're diverging. They're making higher lows. The momentum, higher lows. The volatility, higher lows. Everything is suggesting that we're diverging to the upside. Let me put this down here so we can understand that all of this is diverging, and we'll make it a bit thicker to just emphasize, look, guys, diverging. Everything is diverging right here at this bottom. So is it a time to take risk? I would say, why not? Buy a little bit. However, as we build structure, you might want to get into bigger bags and put the stop loss underneath, because as your position size grows, your exposure to volatility also grows, but you also want to have a plan to mitigate that risk. You want to have a plan just in case it does come down for another lower low and hit this level, which is at about 77 cents. You don't lose too much. You want to be able to stop yourself out with a small loss and understand that your invalidation is pretty much these bottoms. So you really want to do is put a stop loss underneath to mitigate the risk and take a small loss, 2% maximum of your overall trading portfolio. And if it breaks below, get out and reaccumulate where we get another structure. But Prop C right now, based on the divergences amongst all these oscillators, including the trend oscillator, guys, look at this. Bullish divergence, 2 green dots, green histogram bars, EMA is facing up. Do we get in the bullish control zone and see a nice reversal pattern right in this level? Very, very possible here on Proppy. So you know what, guys, if you're bullish on the project, guys, this is the time to start putting it on a watch list. DCA nice and slow, build your positions, because it could be getting a reversal very, very soon. And it's starting to get lower cap here, guys. So volatility definitely to the upside, it would be good. Just curious, if we get back to all-time highs, I'm going to just look. What does it mean? What does it mean? Risk to reward overall. If we get to all-time highs from an entry more or less right around here to right around here, you're looking at about 166% gains. Not bad, but reality is the majority of the profit is getting into price discovery. That's what we want to see. It is a lower cap, so assuming that we're going to get more market cap into it, we're going to go much higher than that. Guys, I don't know. To be honest, I'm due for a deep dive on this. I need to know a little bit more about Proppy and so on, so that I can be more fundamentally bullish on what it's trying to offer the market. Let's move on. Let's take a look at Nexera, NX. What's the ticker? right here, NXRA, next era. Do I have a chart? NXR. Let's see. I know I have a chart. I know I've covered this before. Right here, KuCoin chart. Let's do that one. So just to keep the strategy accountable. Let's see what we've been coming down, guys. Purely coming down. We bought in here, taking profit, and now we're back into a zone, back to where we came from, guys. You know what? That's it. This is the thing. If you buy here, for example, and you start taking profit and you see it moving up, I know you feel fearful. I know, I get it. You're missing out. And then you take more profit here, and it keeps on rallying, and you feel fearful. But look what happened. It actually rewarded you because really you're in a net positive scenario. If your average exit was, let's say, right here, great, fine, but look where we are right now. Basically, you're a net positive scenario. Basically, being able to buy back where you bought it originally at a very similar level in the accumulation range at the point of control. Guys, this is the time to take risk. Risk to reward ratio is great because you're close to your invalidation, which is this horizontal. Okay, because if it breaks below there, guys, be careful, get out. You're in dip discovery. Who knows how low we're going to go? But as we get closer to that level, your risk to reward ratio improves. And the fact is that at that level, you're going to potentially, start to encounter a lot more bulls, people that are not willing to, basically sell. They're going to diamond hand it, follow through, basically hodl through all of this. And what we need is structure. What we need is something like what happened here, a nice double bottom, something that suggests a floor price, and then we can start getting in. I can imagine this thing's oversold on many time frames. Volatility wants to get oversold. Volatility moves up and down significantly. We're still making lower lows and lower highs. What we need is a indication that the bulls are back in town, and the reality is there's no indication of that just yet with regards to price action. We do see a bit of an EMA cross, green histogram bars, a purple expansion to the upside, which is not bad. Do we see weakness in that? Maybe based on the 4-hour, guys. I would be worried about the 4-hour across the market, not just Nixera, across the entire market. The 4-hour pullback might give us a fire set. It might. And this is why I'm being very careful here, because really we're making lower lows and lower highs on the momentum with the price action. And as now, there's no bullish divergence. There's no structural change of character in the structure whatsoever. However, we are at critical levels. So watch list material 100%. As soon as we get some W's happening in here or some sort of bullish divergence with some confidence, that's when we deploy more capital. Honestly, I would put it on a watch list, and that's about it. Let's move on. And let's take a look at Canto. Canto, getting into the lower cap scenario. Canto is a project that I did talk about in the past. And, it came out hot for a good little while. And I'm not even sure. I don't even remember if I hold any, but I wouldn't mind holding because of risk to reward ratio. Look at this. It's back to range lows. And in fact, it kind of did sweep the lows once again. It kind of is, testing the previous lows. Look, if you buy in right now and you put a stop loss underneath this previous low, guys, I understand why you would do that. It's all about risk to reward. If you look at what we're dealing with, is that we're back in and trying desperately to hold support, and we're getting bullish divergence into this, lower lows on the price action, higher lows on the momentum. We're oversold. We see the expansions tapering in. You see the red expansions tapering in, and basically maybe waiting for that green expansion to happen any moment. And when else are you going to take risk? Right now is not a bad idea because of this low. Okay, and the fact that it bounced above it and it's within it. Now, if we can kind of make a bit of a structure, guys, I would be all in. Of course, any little structure right here, put a stop loss, get in. Because if we do something like this, right, where we make a double bottom or go sideways, or maybe even make some bullish divergence here, which is what we're doing, we get some follow through into the structure, make a slightly higher high, even above this high right here at above 9.9 cents. It wouldn't be that bad because we can, paint a bit of a pivot point structure right here and anticipate a nice recovery to the upside, guys. And we're talking about a decent recovery. We're talking about getting back to range highs, even to about 3.5 cents. That would be pretty massive. We're talking about, let's say, right here to right here, you're talking about 200, 300%. Not bad of a move, but I understand the risk. I understand the issue. The issue is, what about if we keep on falling? Well, you need to have a stop loss. The question is, where do we put it? The only place that you have is at the previous low. This is why I like structure, because then I have more confidence that the market might want to hold it as support. We're getting a bit of sell volume into this. Look at all the volume, the sell pressure. We need some support. We need some indication. I'm going to bring this horizontal down to make it more valid. And I'm going to say this, as long as we stay above this level right here, let's make it thicker to emphasize importance. Guys, it's not bad, especially if we, create some sort of pivot point structure here. to marry up with this bullish divergence, we should be okay. Guys, if I've offered you any value in this video, do the channel a massive favor. Guys, we're looking for narratives throughout this market to scale in, to build our portfolios, and of course, stay tuned for the next narrative update. It's going to be coming around the corner, so make sure you subscribe to the channel, click the bell so you don't miss out on any of my future videos. Join the Discord, guys. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. The best part is it's absolutely free. Take care, guys. Have a good one, and don't forget, buy the dip.